Hey guys, DJ from PTA. Want to go over candlesticks today. It's probably going to be one of my first of our tutorial video series. I've had a few people reach out to me and say that they wanted to understand certain aspects of things that I say. And granted, when you've been trading for a while, you get to say different words and jargons and different things that can kind of confuse people. And when you're going over video recaps, so I want to kind of take a step back and go back to the basics, because not understanding the basics of trading is why a lot of people fail. They think it's some holy grail indicator they can use, or they think, oh, I could just trade this way, or I'll just trade, moving averages and stuff like that. Those are all fine and they work, but they're not consistent. The reason being is because the price action is what drives them, and price action can be very radical depending on what time frame you in, depending on what you're doing. It can be going the way that you thought it was going to go, but because you may be in too small of a time frame, you didn't give yourself enough room for that trade to play out. So I'm going to go over today about candlesticks. I had a few people reach out to me about it. So what really took me a while on doing this is because I had to do a little bit of research to see what was already out there. I think the trading community has a vast amount of information, and people get, I guess, fixated on maybe just listening to this one person or just listening to this one guy because he makes a lot of money or whatever. Well, that guy's view of the market is going to be completely different from you. And that in itself is going to make it confusing if you don't understand what he sees or why he sees what he sees. So my goal is to kind of go over candlesticks in such a way, the way that I see it. It's not to say that it is perfect, not to say that it's the holy grail, but I've had people, when I explain it to them offline, say, hey man, you have a very interesting way of looking at the chart, or you have a very good way of looking at the chart, so on and so forth. So I want to kind of give you that information so that you can kind of look at it that way and maybe add it to your arsenal. Maybe they help, maybe it won't, but that's really just the attempt that I'm trying to do today. So ultimately, what is a candlestick? A candlestick is basically information, depending on the time frame you in, that's telling you a story. In that story, it's telling you, hey, this is where I'm going, this is where I'm at. So the basics of the candlesticks is the green and the red, which is how it opened, how it closed. That's what makes it green or red. That doesn't necessarily mean it's buying pressure. That is a secondary thought. The first thought is, how did the candle close and what does the body of that candle look like? So it gives you an idea of who was in control, but depending on the position of the body tells the real story. So let me draw out a candle for you. So this being a candle, and then we're gonna break down the structure of the candle itself. Okay, so okay, great. So right here, what this is saying for it to be a green candle is that the price closed above the open. That is all what a green candle is saying. The high of that candle is the highest point it went to. The low is the lowest point that candle went to. So if this was so happen to be a daily chart candle, okay, what this candle is saying is that the market opened here. It might have went down, climbed back up, and then come back down and close. So this will be the close, this will be the high, this will be the low, this will be the open. So it's saying that the body of the candle was mostly buying pressure. So it had a high, it had a low, it had a high, and it closed. So this will be considered the body. This section here would consider the body of the price action. Now, for some people, they're going to look at it and say, well, yeah, it can be that way, but it also could have traded like this. And that's where you go down to the lower time frames to see that information. So for instance, that was one way of looking at it. Another way it could have traded was it could have opened, went higher, went lower, went even higher, pulled back, and closed. Same difference. This will be the low, this will be the high, this will be the close, and this will be the open. So the vast movement of the stock based on that can be several different ways when you're looking at it from a daily in conjunction to the price action for the day. So you can't just look at the candle. You got to look at the overall trend of the candle to understand which way the market was actually going. Now, the next part of candlesticks is the other side of the move, which is, I'm gonna draw that out for you. This would be, let's see something here. Hit this with the red, and then go back here. All right, so this is your red candle. Now, what does the red candle say? The red candle is saying, I opened here and I closed here. So it's the exact opposite of the green candle. The open price or the close price closed below the open price. This is still the high and this is still the low. So in this instance, in this chart, it's basically saying, hey, I opened here, I might have went as high as here, I dropped back down to here, and then I closed here. So that's closed, this was the low, this was the high, and this was the open, to give you an idea with the trend. But again, that doesn't tell you which way the stock is going. It just told you that that was the price action of that day in that particular trade. So when you're looking at stocks and you're trying to understand, you got to look at it from a whole senses of where the market was and where it was heading to before you place a trade. Just that and alone will help you get into the right side of the trade. If you're trading against the trend, you're gonna lose. Now, there's our traders out there that do very well at it. I'm just not one of those traders. So when it comes down to trading, you have to look at the overall consensus of the trade, where the market is going, where the market is trying to go or go to, or whatever the case may be. So the particular stock I'm gonna use is something that happened recently, which is BKSY was a really good way of looking at the chart to show these different concepts in order. So let me pull up the chart. So ultimately, when you look at this chart, it gives you a lot of information, okay? And I want you to kind of look at it from multiple angles. So this is a daily chart. We marked the low here. This candle here is based on after it marked this low. When this candle closed, it's telling you a story. So what is this candle saying? This one here, this one that I'm circling here. Okay, so this goes back to the three parts of, or three factors when it comes to candles. The three parts are, where is the candle in the movement? Is it at the top of the trend, or is it at the bottom of the trend, or in the middle? The second thing is the body position of the candle. Is it the top portion of the candle, the middle, or the bottom? And then whether it's green and red. Notice that green and red of the candle is the last part that you kind of look at. So let me explain that to you. When you have a candle, and let's say we draw out this candle in particular. So what I'm gonna do is makeshift it to look like that candle. So we had the green here. We had a long wick at the bottom. And we had a smaller wick at the top. Okay, what does that say to a trader? Same difference as we talked about before. This was the open, this was the close, this was the high of that candle, and this was the low of that candle. Now, when we say the low of the candle is where it gets interesting, because the low of the candle tells a story. This is telling me that the body of the candle, with it being at the top portion or the upper part of the actual move. So this here and here constitutes as the move. When I see that most of the portion of the candle is at the top portion of the move, that lets me know that that candle had a lot of energy, a lot of power. They had a purpose on keeping this higher. Now, if you look at this candle, let me erase this, and you break this candle down, then again, this is a daily candle. The daily candle of this is, let me see here. This portion here is very important, from the open to the low. This is where all the buying pressure came in at. Now, why do people ask me and say, well, why you say that? Well, you got to think, this stock opened here and then it went all the way down, and then they pushed it all the way back up, and then they pulled it back down. So that means that the shorts weren't in control. This portion here is smaller than this portion, so there was more buying pressure to keep this stock higher. So when you're in a directional change in a chart, so going back to the positioning, this is at the bottom of the trend. This is the trend. The trend was going down. This is at the bottom of the trend. So this is what you would call somewhat of a reversal, or a trend reversal going the other way. So that was an indication why this buying pressure came up. Now, everyone wants to look for confirmation. Confirmation is usually when you see something doubling or tripling or whatever the case may be. But from a banker's aspect or a money market aspect, the M&Ms, the people who are putting in and out the orders, the machines, they're looking at it like we're going higher and then we pull back. Okay, so the directional change was went higher, pulled back, right? They consolidated it and then they dropped it lower. So this is a directional change. Before it was doing this. Now it turned directions. It went up and then pulled back and not create another swing low. This is where you look at the movement of the stock. So swing low, didn't get higher than that. Did a little sideways price action, dropped, made another swing low. So this was a swing low here, this was a swing low here, but now it has stopped. So that's a trend difference. So when this stock opened up that day, this day gapped up a little bit, that showed a trend difference. So the price action right here, first thing in the morning, was critical as to which way this stock was going to go. Now, how did traders see that before it happened? Because that's the whole concept, is to see this stuff before it actually happens for you, right? So you have to zero down into a lower time frame to see the congestion. So you can see that it popped, went back down. So let's take a look at those candles. Now, these candles are happening at a certain part of the trend, and this goes back to the positioning. This ignited the uptrend. This confirmed more buying pressure. So let's look at that candle. The candle was like this with a long wick. That's buying pressure on that long wick there. So when you see the candle kind of pull back and the short started to take over, they took over here, buying pressure, selling pressure. Now most people will look at that as a doji, whatever. It does have a price difference. It shows it was more sellers than buyers. Why is that? Well, let's take a look at that. When you have a stock that has this, and then it has a long wick at the top, oh wow, this thing doesn't want to, there we go. And then it has a short wick at the bottom. Now, despite the fact that it is green, what this is telling you again, it opened here, it closed here. This was the low, this was the high. Now, you got to think about this. This stock probably did some type of number like this. It probably opened, went high, pulled low, and then closed. So the overall body of the trade was shorts. That means there was sellers entering in here. Sorry about the misspelling, but you guys get it. The sellers were entering in at that point. They had an interest in pulling the stock down. So ultimately, that will let you know that this stock may be going lower. Why? Because it is at the top of the trend. So let me go over that. It's at the top of the trend. Remember, the trend switch is going back up. So the overall trend is down, but in this miniature trend, before it did the confirmation, it's showing that it wants to go down. So that's the reason why it got heavy, heavy, heavy the next couple days on the downtrend. Now, when you factor that in with volume, it didn't really have a lot of volume. So this was 411 on the down, 464 is where they all piled in. And then they didn't continue to pile in. It started tapering off 274, 337. So this was them piling in, but not a lot of volume. So let's look at that on a smaller time frame. So we'll step back to a 4-hour. So when you look at this trade, you can see that, you know, ultimately there wasn't a lot of price action, right? So when you drop to this low and then you rip it up higher and then you pull it back, then that means no one's here willing to sell their shares to go short. So they had to take it longer. So now we zeroed down into the 5-minute. There was no price action. So this is what ignited this move. They're looking for people to contribute to the stock. This was the initial move. Okay. Now, if we take it a couple days later, let's go to the 27th. The chart looks a little bit different. Let's go back to the 4-hour. So this right here was the initial move up. So you notice that for whatever reason, this area and area supports are always supported by multiple candles hitting that area. I would say it's about right there, 250s. And then the support was somewhere here. So the body of the range is started right here in entry day. Pull down. So you got shorts here. Draw this out for you so you can kind of see. And this is how candles and volume will work for you. Now, the day before, volume was pretty high, which ignited the move. Now it has started a new trend. So you can get in on the first day if you want, but I don't really do that. I like to see based on what the stock may do, based on what it's been doing, so I can get a consensus of what's going on. So let's look at these candles. So I'm gonna mark one for B for buying and then selling, so you can kind of understand. So initially you had a bunch of sellers sitting in this area right here, right? But these is like, this is a selling candle. This one here, buying. This one here, even though it's red, look at how much they pulled it back up. That's a buying candle. Same with this one. So even though the stock was going down, someone was capturing it from a higher time frame standpoint to buy into that stock. This confirms some buying. This was the selling. And then this confirmed buying. So you got buy, sell, buy. So ultimately the next piece, when it actually did higher lows, may be a buy candle. Now this right here will be considered selling because of the amount of pressure they pulled down on that stock. This one here is probably considered indecisive. They don't know which way it wants to go. And then the seller step back in. So it's like a conversation. So let's go out to the 31st, couple more days. And now we're starting to see where this big massive move came from. Okay. So when you see this, this is all based off buying and selling of the candles. Remember, we had this nice move up. Sellers got into this trade. We had indecisiveness. I'm going to put an I for that. We had selling, buying. Look at the wick. Sellers kind of trap buyers here. You got sellers taking control here. Now, why is it that it ripped after that? Because obviously we got selling, more selling candles than buying. Well, the reason being is because of the resistance support. Remember, before it acted as resistance, that 252 area right here, that blue line, the market couldn't get below, couldn't get above it and hold based on the open close price. Same way here. They couldn't get below based on the open sales price. These wicks is just telling you how low the market went down to try to find buyers and sellers. And then it ripped. Once it confirmed here, it did a double confirmation on this candle that it can hold 252. Then you got your next confirmation here when it held. Now let's look at that price. That close price on that was 252. My line was at 251, which I normally would have moved it to 250 because I like the whole numbers. So when they confirm on a 4-hour candle that they can't get below there, I'm waiting for any rip or some type of rip to happen. Because now what traders are doing is trading between this 250 and 234. We already confirmed that this 20 cent or whatever gap, I probably would move this to 235 or 230 just to be safe. I will move this area. We know that this 20 cent area is where that everybody's everyone is consolidating that. So when we zero down into a lower time frame, such as the 5, you can see this is where they're accumulating. They picked it right there, boom, pulled it right back up, boom, pulled it right back up. So this gives you the confidence that this thing wants to go or keeps trend. Now, if you zero down, you can see the change, the higher lows. You can see it right there where it started to step up or close in on that gap on that triangle to push it higher. This was all sideways price action. See how it's staying inside the actual zone. It stayed right there in the zone the whole time. Then it popped, pulled, and then went back down, and then went straight to that demand zone to rip higher. So what does that look like? Well, if you're looking at this from a 5-minute standpoint, as soon as it cracked over here, you could have risked to the low, which would have been about 7 cents. You could have risked to that 5-minute candle, or you could have risked to the full candle or the extension at 20 cents. Me, I probably would have risked to 12 cents, 10 cents, load it up, and then let it rip. Now, why is that the case? You got to remember the overall trend based on the daily was moving up. Remember, this was the first leg of the move. It consolidated, still making higher lows. Then they ripped it higher. Now, on a higher time frame, you can see here that the buyers were in control here. This was 50-50. Sellers were in control. This is the day that they loaded up or whatnot, thinking that the stock was going to go down, low volume. And then the next day, they popped it back up, went higher, and the buyers stayed in control. This is why reading these charts is very important to understanding the candlesticks. Now, coming into this day, you see that there's a taper off, a big candle, the short side. So the sellers are getting involved. Now, let's go a couple more days. Let's go to the end of this week. So now we have a difference in action when it comes to the stock. One of the key things you want to look at is, okay, we knew what our area was. It pulled up, hit up resistance. This was a red day. Very little buying pressure, all red, all sellers. Now this is the candle that tricked everyone, or this is the candle that opened up the difference in the trend. This day, June 2nd. So let's zero back in on that day based on the 5-minute. This is the second. So we had this big massive push down. Let me go to 4 hours so I can make it cleaner. Massive push down, pop. They used this area of support for a minute, 277, and then you had this push up. Now, why do I say it was a massive trend down? Well, when you get 4-hour candles that are like creating lower highs and lower lows, that's a trend change. Versus here, it wasn't doing that. It was kind of going sideways. Then you had a pop sideways and then a pop. And then you actually had a trend down. This is a trend down. That's the difference between these candles and these candles here. This is an actual trend down. So the market started to trend down. So everyone's looking for that bounce. So it trend down. The bounce came right here into June 2nd. Now June 2nd candle is very unique. And let me draw it out for you. June 2nd's candle kind of looked like this. So let's go back to the chart, give you a quick visual. Not exact, but we'll work with it. So the ultimately what it's saying is that this was the high, this was the close, this was the open, this was the low. So that means if you look at the chart, go back to the 5 minute, we had a massive ramp up in the day and then a flush and close. So most of the day the shorts took control. But see, when you looking at it from, oh, it's a green candle, it was buying pressure. Yeah, there were buying pressure in that candle, but the basis of most of the candle were sellers. So when I look at this chart on the 5 minute, I can see that basically the sellers took over. They bounced it, the buyer stepped in here and bounced it a little bit, but majority of the price action is sellers. And there was plays in the interim. You know, you could have played off of this, off the bounce, and took a little bit of a swap. But the overall consensus of the trade was selling pressure. So when we go back to the daily, there's no surprise that this was selling pressure. This activated after it gapped down. Remember, it opened here, closed here. So the close price was, let me see something here, was 286. The open price for the next day was, let's see, open price 281. So I closed here and I gapped down to 281, 5 cents. That pushed it just going down the next day. So that next day being June 3rd, look at the 5 minute. Bounce, crip, boom. It popped up to confirm the downtrend up under previous day close, and then just faded for the rest of the day. Now, what I want you to draw attention to, let's go back to the 4 hour, is how it hit or respected this zone. This is how you know that certain areas are support and resistance based off the price, because you can sit here and see that, okay, suck down. This is all resisting. Then became support. They brought it back down and ripped it back up. Tried to bring it down, rip it back up. Tried to bring it down, ripped it back up on volume. Then they faded it and they put it right back to that area, the 250 area. 250, 252 is not exact because you got to think is, you know, the numbers and stuff like that. So it's always a zone. We know that this is a unknown zone because this is where it accumulated from. So when they reached outside of the zone from the 250s back up to 370s, that was a nice move. And then they pulled it back down to the zone. So they're always playing it off of support and resistance. We knew what the support and resistance was on this one just because we had a viewpoint of it from the previous days. And we knew how to read the candles. So even though this was a red candle here, there was plenty of buying pressure that kept that stock propped. Buying pressure to keep the stock propped. This was buying all together. This was selling all together. So when you start to look at it from that point of view, it starts to make a little bit difference in the conversation. This was all selling pressure and it was green. So this was a needed move. This is where the shorts got in. That's why they were a bit indecisive. And then the shorts took back over. Buying pressure stepped in. And then it stepped in again. So that was where that nice move, like I showed you guys before, off of the 5 minute, where this is where you could have looked at this as being, okay, you're in play. I know that you're looking to go higher. Because why? Well, let's look at the overall chart. You just came off this massive rip with a consolidation. You never really broke back down. you have volume. The volume crept up here. So I can see that you were trying to raise it higher, but you needed some more juice. So you had to get shorts involved. So it popped it up. It didn't get over this previous day's high. So ideally it was still in play to go down, but they were consolidating it. And then they dropped it down, and then they respected this 250 area. Everyone saw that 250 area and said, oh, okay, it's starting to respect this area. It's starting to respect this line, and we're going to rip it higher because that's where we want to take it. So they end up ripping it higher, and now it's in an actual downtrend. This is considered a downtrend. Boom, boom, boom. Popped up. Still didn't get over the previous high. So it creates another downtrend. Now it's getting interesting because they're coming right back to that previous demand zone right here. And you see the buying pressure step in. Now this is clearly selling, but you see the buyers trying to step in here off that candle. So understanding the candles, understanding the chart, and where the positioning of the candle is makes a big difference as to what or where the stock is going. As I showed you here, and this goes back to the word doc, if it's green or red, the body position of the candle is in the top portion of the candle, the middle or the bottom, and where it is actually at in the trend. With those three consensus, you can kind of get an idea of where that stock is going to go, especially the higher the time frame is. As you can see here, this created a downward move. This candle created this downward move. Why? We're at the top of a trend. Shorts and shorts getting involved. So when you at the top of a trend, this could mean different. This is telling you sellers. 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 So when you're looking at this from that point of view, you have to put yourself in a position to understand that, oh, this is where the sellers are. This is where everybody's sitting at. Looking at it from time frame to time frame gives you a different story to understand which way am I really trying to go. These sellers got trapped. These sellers got trapped. That's what caused this squeezed. So when you talk about stock squeezing, that's the reason why. Now, if this candle here was at the bottom of a trend, that could mean that it was exhausted. So meaning if you looked at it from this point of view, right, but it was actually going on a downtrend. So it was boom, 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 boom. And then I'm going to paint that this candle here as representation as green. That may be the indication that the stock is going to go higher, or it may be getting exhausted. The seller stepped in but couldn't get it any lower. That next candle may do this, and then this, and then change the trend. So this candle right here, that green candle being at the bottom of the trend, can set you up or help you understand that this stock may be turning around. That's sort of what happened in this trend here. This doji lets you know that something was indecisive, and then they confirmed it with this. So they shot it higher. Then they pulled it back, and then the price action in that morning, based on the 4-hour, was letting you know that I'm going higher. All this consolidation, protection of the 230s, breaking hold of the 250s, ripped it higher. So guys, I hope that this explain candlesticks a little bit more in depth so that you just don't think, oh, it's a green candle is going up, or oh, it's a red candle is going down, to understand what the actual price movement within that candle is actually telling you. The higher the time frame, the more data, but easier to read. You just have to wait for it to form from the higher time frames into the lower. So you can see if the stock's getting closer and closer to a pivotal area like the 250s. I mean, literally, the stock dropped to 240. So you're talking about a 10 cents risk from the low that it tapped twice. This is a great entry in the intraday to get in for a rip to 373. Now, why do I think it's going to go to 373, or why did I think it was going to go up? Well, I'm looking at the consolidation that happened prior. I'm looking at the fact that it's starting to hold an area before that used to be resistance, so it's acting as support. So all these people that got in the position here, and people who got in the position here, and those even here, are all trapped. They have created a trap for those people from a bigger standpoint. But because you're looking so close at the smaller time frames, you can't see the overall conversation that's happening in the stock. So guys, I hope this helps. If you like or learn something from this video, hit the like button, hit the subscribe button, and hit that bell for notifications. By hitting the like button, it just allows other people to be able to see this content to help them become better traders as well. And guys, as I tell everyone in the trading community and those who are learning to start to trade or who have been trading for 10, 15 years, it doesn't matter. Stay studying and stay focused.